Pantheon AI presents Trade Chaos Rocks Pre-Fed Markets. Kicking us off, Host B, it feels like we're walking into a bit of a storm, doesn't it? The Fed meeting is just around the corner, and the market's already buzzing with this trade chaos headline. What are your initial thoughts?
Absolutely, Host A. Trade chaos rocks pre-Fed markets. That's a pretty strong statement, right? It really sets the tone for what investors are grappling with. It's not just the usual pre-Fed jitters. There's this added layer of uncertainty from these quote-unquote chaotic U.S. trade shifts that are definitely making markets wary.
Wary is a good word for it. I saw that Reuters piece. Chaotic U.S. trade shifts leave markets wary. It makes you wonder, what exactly are these shifts? Is it new tariffs, policy changes, or just general unpredictability? Because it feels like that's really driving a lot of this confusion we're seeing.
Yeah, it's that confusion element that's key. It's not necessarily about one specific policy, but more about the lack of clarity and the rapid changes that have investors scratching their heads. You know, markets hate uncertainty. And when you combine that with the anticipation of a Fed meeting, it's a recipe for volatility.
Right, volatility. But then, on the flip side, we're seeing something interesting. Long yield relief. That almost sounds contradictory to trade chaos. How do those two pieces fit together in this current climate?
That's a fantastic question, Jose. It does seem a bit counterintuitive. Long yield relief suggests that longer-term bond yields, which often reflect inflation expectations and economic growth, are easing up a bit. This could be due to a few things. Maybe some investors are flocking to safer assets like bonds amidst the trade uncertainty, or perhaps there's a revised expectation about future interest rate hikes. It's a complex interplay, but that relief in yields could be a silver lining for some, even with the trade confusion.
So essentially, some parts of the market are finding a bit of calm, while others are in turmoil. It's like a mixed bag. And speaking of inflation, we also saw reports that U.S. business activity improved in May, but inflation is poised to accelerate sharply. That's a huge one for the Fed, isn't it?
Oh, absolutely. That's the Fed's biggest headache right now. Business activity improving is generally good news, right? It suggests economic strength, but when you couple that with inflation accelerating, it puts the Fed in a really tough spot. They're trying to tame inflation without stifling growth, and these numbers suggest that the fight against inflation is far from over. It almost gives them less room to maneuver, if anything.
Less room indeed. So, before the Fed even makes its big announcement on Wednesday, May 28th, there are a few key data points coming out. What are we looking at on Tuesday, May 27th, that investors will be absolutely glued to?
Good call, Jose. Tuesday is a big day for pre-Fed indicators. First up, at 8:30 a.m. Eastern Time, we get the Advanced Durable Goods orders. This one's crucial because it tells us about new orders for factory hard goods. It's a real leading indicator for manufacturing activity, so everyone will be watching that for signs of industrial health.
Okay, durable goods. That makes sense. What else for Tuesday?
Then, at 10 a.m. Eastern Time, we have the Consumer Confidence Index. You know, how optimistic are consumers feeling about the economy and their own finances? Higher confidence usually means more spending, which is a huge driver of the economy. So that's another big one for gauging consumer sentiment.
Consumer confidence is always a bellwether. And then, locally, I see the Dallas Fed Manufacturing Survey later that morning.
That's right, 10:30 a.m. Eastern Time. The Dallas Fed Manufacturing Survey gives us a regional snapshot of manufacturing activity in Texas. It covers production levels, new orders, employment trends. It's a good pulse check for a significant part of the economy. So Tuesday alone is packed.
Wow, so much to digest even before Wednesday. And speaking of Wednesday, the day of the Fed meeting, besides the main event, are there any other data points we should keep an eye on?
Yes, there are a few more regional and market-specific indicators. At 10 a.m. Eastern Time on Wednesday, we'll see the Corporate Bond Market Distress Index. This is a good gauge of broader financial market health. If that index is flashing red, it could signal underlying issues.
So a health check on the corporate bond market. What else at 10 a.m.?
Also at 10 a.m., the Richmond Fed Survey of Manufacturing Activity, similar to the Dallas Fed one, but for the 5th Federal Reserve District. It'll give us another regional look at manufacturing conditions, shipments, new orders, employment. It's all about piecing together that national picture.
Right, more manufacturing insights. And then, another Dallas Fed survey later that morning?
Exactly. At 10:30 a.m. Eastern Time, the Dallas Fed Texas Retail Outlook Survey. This one shifts to retail activity in Texas, looking at sales trends, pricing, and employment in that sector. So we get manufacturing and retail insights from a key state.
So essentially, all these indicators, whether it's durable goods, consumer confidence, or these regional surveys, they're all pieces of the puzzle that investors and policymakers are scrutinizing. They're trying to get a read on economic strength or weakness, which, of course, will directly influence the Federal Reserve's policy decisions. It's a busy week, isn't it?
It really is, Host A. Every one of these reports feeds into the narrative that the Fed will consider. They're not just looking at one number, it's the whole picture. And with the added layer of trade confusion, it's going to be a fascinating week to watch how everything unfolds.
Absolutely. Thanks for breaking all that down, Host B. It's clear there's a lot more than just the Fed meeting itself driving market sentiment this week.
My pleasure, Host A. Always a pleasure diving into the markets with you. Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.